Hercules. Hercules Site Services. Let's have a look at that. Blue, the name of the company, it's been updated in the last 7 days. Okay, final results, or maybe I've added something in there. They're looking at could be anything. Could be updated forecasts. Could be interim results. So Hercules Services. What do they do? Click on the logo. Their website takes a while to load, and they do that. They're one vision, one team, one solution. Through an innovative and collaborative approach, we will generate, build, and sustain a world-class services and delivery, which will leave a legacy future. They've got one of these things, these suction things. They just suck dirt out of the ground. But they're in multiple divisions within an organization. We are one-stop shop for all your project requirements. Our expertise range from labor supply, health services, facilitation, and our incredibly high standards. Incredibly high. Okay, labor supply, enable labor supply, construction, all that stuff. So let's have a look at the tail of the tape. They are share price 41 pence, target price 55 pence. So it's 34% upside. They've got a market cap of 26, enterprise value is 31. Now, enterprise value, of course, is basically the market cap with cash and debt added. So it's more accurate valuation. Now, if it's in red here, it means the enterprise value is bigger than market cap, which means they've got more debt than cash. Okay. Net asset value per share, 14 pence. Not a lot of volume there, 20. If this is above 100,000, it goes to red because there's more liquidity. Revenue, good revenue, but you're thinking, okay, well, why is it that? So you must think, okay, it must have low margins then. So cash of 4.1, debt of 9.9, but operating cash flow is positive and free cash flow. They pay a dividend. And so it's not too bad. The value is questionable, low margins, but the growth is there, momentum's there, potential is not big, but efficiency and health, worth a look. And by the way, if you click on any of these, it'll explain what these are about. So the growth is good all around here. Okay, it's all green on the screen for the growth, and these are 30th and 9th. These is the interim results they came out with. Okay, so these are interim results to the 31st of March 2024. So the top line is decent, 32. Above 20, you get some green scores and top scores. Operating profit growth, good. Net profit growth went down from last year. Zero operating profit or cash flow growth. And those are the values. So they've got PE of 65. So on that kind of revenue, it suggests, okay, their margins are quite thin then. They're doing like 84 million in revenue. And they're only 26 million market cap. And their PE is so EV EBITDA is okay. Price to free cash flow is fine. So what's encouraging here, though, if you look at the net debt, it's 4.3. So it's come down from 5.8, which was the 30th of September 2023. So it has come down. And in fact, gross gearing has gone down, of course, as well. But the current ratio is okay. As the margins improve, the gross margin has gone down pretty much from full year. Operating margins also dropped to 1.8. And we got return on capital down 8.87. And there's the brokers there, got 34% upside. But the chart, let's take a look at the chart, ladies and gentlemen. It's looking okay. It seems to be, no, chart. I'm typing in chart there. Hercules. So yeah, you see, above the 50-day here, a dip down. Like I said, when you're almost a breakneck rise there, be careful because it could come back to solid. And it came down almost right on the nose of the crossing moving averages, 50 crossing up. That's maximum points if you're above that and they're above that. So it's got maximum points of momentum. So it's not getting too bad. Like I said, you've got momentum there, growth or value, it can work out. Ideally, you want all three. But I said the value is questionable, but they've got growth and they've got momentum. And that's showing it's doing quite well. So it's looking good in the chart. Where will it go to? I don't know. But it's done very well there. So, who knows? So, let's look at the forecast a second. So, what are the forecasts here? Hang on. What are the forecasts? Good question. There we are. Okay, so this year they've had a cracking bit of growth. They're not going to continue with that growth. They're saying 70% up this side, 13%, 4%, and 3. So, but they are seeing the margins improve a little, 20% gross, which is okay. Wow. I'm looking for 40% gross margins minimum, really. Depends what industry you're in, of course, but run at that level. Uh, if you're manufacturing, capital intensive, uh, yeah. So we got EBITDA margins of less than 5%. So yeah, that's the issue there. It's just thin margins, and be careful because thin margins can become no margins, or minus margins. Uh, yeah. So obviously 13% upside there on 8 and 15. So there we are. Anyway, ladies and gentlemen, of the watch list jury, Hercules Site Services. What do you reckon? Ed, Herc, no. Expensive and a lot of debt. There is, yeah. I mean, they turn over cash, so they are making money. But like I said, with that kind of margin, sometimes it's hard to maintain or service that debt. Tim M, no. Mark, no. Lots of debt. Brian Herc, wait for a pullback. Yeah, well, you can be right. See, as long as you get momentum in the chart and it doesn't go away. Harish says, no. Herc, ignore as poor growth outlook and very poor margin. So high risk of going the other way. Yeah. I mean, stocks can rally doesn't mean you should buy them, Sometimes you have that's down to sort of supply and demand, essentially, You can, if no one's selling and, people are buying, then it can go up, but it doesn't mean it's going to keep going up, after a while. In fact, let's look at the chart there, because they haven't been on the market long, have they? And I don't think so. Did they look at the market? Yeah. So they came to the market here literally in 2022, and at what was that? 52 pence down to 41 pence. So it's literally a nice technical bounce to the bottom. Maybe you'll have some people exiting now. Yeah, well, I can't see the margins improving. I know. Because then, well, they're not improving massively, are they? According to forecast. Go!